Good afternoon, everybody. Today we have a very distinguished speaker with us for the Going Digital series. We have Praphul Chandra. He is an alumnus of ITBHU, Columbia University, and he has a PhD from the Indian Institute of Science. He's worked for companies like Infosys, Texas Instruments, and HP for over a decade before he founded this company, KoineArth. KoineArth is a startup which is working at the intersection of very exciting technologies like blockchain, machine learning, and mechanism design. So it's a great privilege to have him here with us today. We are going to be discussing about blockchain, trying to demystify this topic. So welcome to the Going Digital series, Praful.
Thanks, Siddharth. Pleasure to be here.
So let's just jump into the topic, Praful. What I'd like to understand from you is first tell us about what is this blockchain. Demystify it for us. What does it do? What problems does it solve?
Right. Yeah, so Siddharth, the best way I would kind of explain this is if you go back and look at the history of this technology, it was born in 2008, right? And it was born and created in the context of what we call cryptocurrencies today. The first cryptocurrency was, of course, Bitcoin. But over the last decade or so, this technology has been decoupled from Bitcoin and cryptocurrencies. And today, blockchain exists as a technology in its own right, completely independent of cryptocurrencies. And that's perhaps the first thing to get, right? That the separation of concerns between the crypto world and the blockchain world. A lot of media attention is on crypto right now, but blockchain is now an independent technology. So now, going back to your question about what the hell is this thing, right? Very simply put, it is a new database or it is a new ledger, right? Now, if you just stop there, it seems pretty unexciting. We have so many databases in ledger. I mean, what the hell, right? One more database, what's the big deal? But I think there are three important characteristics which make it very, very interesting and transformational. The first of that is that unlike traditional databases or ledgers, in the enterprise scenarios which were owned and deployed by a company, by an enterprise, this kind of a ledger or database is owned and deployed and operated on by a group of enterprises. And that small change has a transformational impact. The fact that you now have a ledger or a database which is now shared across enterprise boundaries is perhaps the first differentiator that we should keep in mind. The second differentiator is that unlike traditional databases, this is a ledger or a database in which you cannot delete or modify entries, and everything that you do is digitally signed and timestamped. Right? Let me say that again. You cannot delete it, you cannot modify it, and everything that you do is digitally signed and timestamped.
By all the stakeholders who are involved in the blockchain.
That's right. Whoever is writing it, it's a shared ledger, which means multiple parties can write into it. But once you have multiple parties writing into it, you run into a scenario when one party may delete somebody else's entry or modify somebody else's entry. So they kind of remove that completely and said the only thing that you can do is write. And then an added layer of security saying if you write it, then you cannot deny that you wrote it. And that becomes the second important feature of this database, which we call auditability, right? And people from finance, people from compliance, people from inventory management find this to be a very, very interesting value proposition that you have a undeniable audit trail of what is happening between companies when value transfers between companies. Right? That is the second value proposition. And the third value proposition, which is what we call smart contracts, right? And unfortunately, I don't really like that word. It's misleading, right? Because smart seems to remind you of machine learning and AI and intelligence and analytics, but that is not what the word means. And I think a better name for this technology would have been auto-executing contracts, right? And what that means is that if two parties have agreed on certain contractual terms in a B2B transaction, for example, then the underlying platform ensures that the contractual terms are enforced without intervention of either of the party. So what you have done is you have taken away manual intervention from contract enforcement. And the implications of this are huge for B2B contracts and transactions. Right? So those three value propositions, at the simplest, it is a database. What's so special? Shared between multiple entities. Transactions cannot be modified or deleted. If you do a transaction, you digitally sign it implicitly and timestamp it, which gives you auditability. And you can bring in automation. But I will again say, this is not automation the way we have traditionally understood it. This is not automation within an enterprise. This is the automation of contracts between or among enterprises. And these three things really kind of open up what you can do with this technology. So hopefully that was a short summary. I went on a long-winded answer, but hopefully I answered your question.
No, it was. It's definitely opened up some clarity about the topic. Why is it seen as so transformative for business?
Right. So see, I think why is it seen transformative is the way I see it, and this is like a 60,000 CXO level view or a board level view of the economy. What it does is it changes the boundary of your firm. Right? What that means is what you traditionally thought of as your company. This is my company, or this is my organization, or this is my enterprise. That you need to rethink, right? Why do you need to rethink? Well, you need to think whether business parts are outside your enterprise and inside your enterprise, right? Your banking partner, your financing partner, your supplier, your channel partner, are they part of your enterprise or not? Until now, till about a decade ago, we had a black and white. This entity is part of my company, this entity is not part of my organization or enterprise. Now, with a shared database, you're fundamentally saying, well, the boundary of my firm is fluid. My financiers are partly, or this bank, my banking partner, is part of my enterprise boundary loosely, because I can have a shared ledger with them. I can exchange data with them. I can borrow capital from them. I can show them my inventory, right? And what it does is, by enabling data sharing across enterprise boundaries, you are breaking down the silos between an enterprise, its suppliers, its banks, its logistics providers, whoever it wants to work most closely with. And therefore, we say that what you're going to see is that the fact that, there was a management professor, I forget the name, 2 decades ago, they said, supply chains compete, not companies. And that statement is now going to become true in its real sense of the word.
I understand. I have a question related to this, that, if you're looking at it from point of view of companies that have already got, these humongous ERPs in place, they have anyway over the last 1 or 2 decades actually opened up these systems to their suppliers, to their customers, through portals, right? They've given them portal access, and specific data is pulled from ERP or pushed into ERP from those portals. How is that the common thing which is being done till now? How is that different from blockchain, and what does blockchain do differently?
Right. Great question, Siddharth. So let's look at the history of data sharing across enterprises, right? And this is a journey, and we kind of internally talk about a 5-step journey, right? In the first step, an entity starts by having a ERP or an accounting system, right? And anytime data has to leave the accounting system or the ERP, it takes the form of a PDF or an Excel sheet, and it is attached to an email and sent, right? Let's call this stage 1 of digital supply chains. Stage 2 is what you are talking about. You create portals for your suppliers or for your customers to come and enter their data or interact with you on these portals. We call it stage 2 of supply chains, because data is now beginning to flow better than it would have with PDF and Excel sheets and emails and so on and so forth.
Correct.
Step 3.
It's more real time, basically.
It's more, well, it's still not real time, but yes, the probability of data mismatch between two companies has reduced.
Yes.
It is still relied on manual process, but it's better than PDF, right? Stage 3 is a technology called EDI, electronic data interchange.
Yeah.
It's a 3-decade-old technology, right? And basically what EDI was a set of data standards to say how do two companies exchange data with each other, in which format. For example, they said if one company is sending a purchase order to another company, these are the fields that can be filled in this format. So it's on an XML file, right? So this is an XML file in which a purchase order should be structured, right? Or if one company is sending an invoice to a customer, this is the format. And the transport layer was FTP or HTTP. And there was this whole innovation after EDI was set up in the last 3 decades. A bunch of companies came up and started offering these EDI solutions, right? Stage 4 is where what we call private blockchains come in. Right? So what is the fundamental difference? Two fundamental differences between EDI and blockchain-based B2B digital platforms. The first one is that whether you talk about partner portal, whether you talk about EDI, both of these are what we call point-to-point solutions, which means one company is sending data to another company. Right? With blockchain, what you have is the ability to do multi-party data sharing. Think of it as a WhatsApp group, right? When you create a group, you can coordinate operations between multiple parties in the same group or same network instead of exchanging data for between two parties. So for example, take a very simple transaction between two parties, a buyer and a supplier. The buyer will send a purchase order to the supplier. Supplier will send a shipment notice and the supplier will send an invoice. Very simple. What if this invoice needs to be financed? How does a bank come in the middle? Right? Now, first of all, the bank must implement its own system, but then the invoice must go to the bank. The bank must just then send this invoice to the buyer for verification. So now you have three parties and there are three point-to-point conversations. Right now, let's suppose there's a logistics provider who needs to carry the material and he's responsible for transporting the material and to bring in. Now, how many point-to-point connections do you have to build? Right? And the multi-party value proposition of private networks is really seems again the small delta, but transforms the way integration is done. And think about the difference between SMS and WhatsApp. Right? SMS was point to point.
Yeah.
WhatsApp is group. And how do we coordinate today? We coordinate anytime more than one party has to coordinate, we form a WhatsApp group. And that's what we do with markets. And right, we say basically, we allow companies to form these private groups. Underneath the hood, one group is a private blockchain between those companies. But that is really the power. So that is one. The second big problem is, remember, EDI was a data standard. So there was no notion of smart contracts. Contract enforcement was still outside the purview of data sharing. That is the third bullet of blockchain was smart contracts. And once you have contracts built in, then a lot of the reconciliation effort between companies and payables and receivables, what was delivered at what time, who owes who how much, that process is automated. Right? So that really is the value proposition if you compare it to traditional technologies. And the last phase of this, the stage 5 maturity, is when you start to see public blockchain-based consortia being formed, right? And that really kind of brings another huge transformation impact that requires participation from regulators, or at least a push from regulators to kind of say that data sharing must happen at the industry level. And that again brings in standards. It helps with sustainability initiatives. It helps with geo-origin enforcement, but that is one step further. But that is the purpose where we are going.
Brilliant. I think that really elucidates the whole difference between what we have today and what blockchain brings to the table. Would you want to just quickly reel off a few use cases for blockchain?
Sure. So we see the way we see this happening. There are three use cases that we see in the short term, and two in the short term and one in the medium term. Right, where we are seeing adoption right now. Number one is in supply chain, right? By the definition and nature of supply chains, these are multi-entity constructs, right? There are buyers, there are contract manufacturers, there are suppliers, there are third-party logistics providers, and they need to work very closely together on a day-to-day basis to coordinate their operations, right? So supply chain, we typically talk about three flows: the flow of goods, the flow of money, and the flow of information. And think about blockchain as the layer which reconciles these flows and synchronizes these three flows, and the value proposition of that. Value proposition can be as simple as, by having inventory visibility across the supply chain, I can reduce the base stock levels that I hold and free up my cash. Or they can be, I can bring financiers as part of my supply chain and enable financing for my tier 1, tier 2 suppliers or my distributors or retailers, right? So, and that starts to tell you where the second use case is, which is finance, right? Because now what you have is financiers and NBFCs and banks being able to become integral part of these networks. whereas till now they were an arm's distance away. Like they are now becoming an integral part of these supply chain networks. And since they have visibility into these secure audit trails of transactions, they are able to offer capital, hopefully at a lower risk, and therefore hopefully at a lower cost of capital. Right? So that is the second use case. The third one, which we are seeing, I would say, green shoots of, which we have always wanted to do, but we have now a couple of customers who are talking to us about this and deploying this, is data monetization. Right? The idea that companies have been sitting on data, I mean, we have heard this so many times, data is the new oil, right? But if data is the new oil, we still don't have a way to make data flow across enterprise boundaries. Every organization is sitting in its data and saying, this is my data. It's very valuable. I can't share it both for profitability and compliance reasons, right? But here is the interesting thing. I worked in HP for several years, and after last 4 years, I worked in data analytics and machine learning part of HP. And one of the insights that I kind of realized after working in the industry for several years was that data really becomes powerful when it is combined from multiple different sources. Okay? And what is interesting today, that the data that will be really valuable to the bank is actually sitting at an enterprise which is making buying decisions. It's not the bank's data. What the enterprise is really interested in is the supplier data. What the enterprise is really interested in is the distributor or the retailer data. So this data is there, but it is split across enterprise boundaries. So how do you incentivize this data sharing with a business use case while still ensuring compliance as well as incentives? I think there are very interesting use cases that we are seeing. I can't share much right now, but
I think this is very fascinating, Praful. If that actually leads me to my next question, when we are looking at evangelizing blockchain, right? Obviously, there are multiple stakeholders involved here. There are banks, there are the suppliers, there are distributors, multiple stakeholders. So how does one go about evangelizing blockchain first at an enterprise level and then across the supply chain or all the stakeholders?
Yeah, it's a great question, Siddharth. Again, I'll put it three ways. The three ways we think one of three ways it can succeed. The first is what we call the carrot approach. Okay, where you kind of build incentives for every stakeholder to make sure that they participate in this digital ecosystem that you have built around your enterprise. What can be the carrot approach? The simplest carrot approach and the one that works most efficiently is access to capital. Right? If you can make a bank or a financier an integral part of your network and enable the flow of capital or the lending based on transaction data, then we see things work very nicely. Right? The second is what we call the stick approach, right? Where the anchor, there is a big anchor in the middle, and he basically yields the stick and forces the smaller partners to join, right? And honestly, it is an inertia breaking solution, because it is not as if that the solution is not beneficial to the suppliers or the distributors or the SMEs. It is, but it is just the inertia in the SME segment to move and adopt something that the stick breaks initially, right? So you need an anchor to kind of force this to happen, or an enterprise. And the third one is what we call the regulatory push, right? So for example, in the telecom sector, we have seen this in India. TRAI kind of made a push for the telecom operators to come together and form a blockchain for the spam call problem. In the US,
has it succeeded?
Yes, it has. Yes, it has. Yeah. And it's working right now, right as we speak. And in the US, the healthcare sector, the one of the things that is happening is that the regulator is forcing the pharma companies to work together to be able to share traceability information about medicines, right? One of the things that we are seeing, the World Health Organization is right now working on a health passport, especially with COVID taking our mindset, saying, how do I ensure, how does an airline, how does an immigration department or a hotel ensure that this person is actually vaccinated? You need data sharing across enterprises, right? And we are seeing these use cases emerge, and this is the regulator push nudge kind of thing. So those are three things, right? Either build incentives, and the best incentives right now that work right out of the bat because people understand them are supply chain finance solutions. Second is the stick, and the third is the regulatory push.
Lovely, such clarity. Praful, fantastic insights. As I said, in building a business case for something like this, right? How do you do that? How do you build a business case for a blockchain initiative? Because a lot of investment obviously is going to come upfront.
Well, so that's not true, right? And what we have done, one of the things that we have done over the past 2 years is reduce that threshold of entry. Instead of asking our customers to spend a lot on capex, we are now offering a pure OPEX solution, which is a pay as you go. Right? And of course, a lot of enablement has gone inside that. So that's half the answer. The other half of the answer is we have been in the field for 3 years now, right? We have been playing with this technology. We understand where the ROI is going to come from, right? And now when we go to the customers and they ask us, what is the business case? We say, here are the 6 ROIs. And ROIs can be starting with access to capital, inventory visibility, certification of products and data monetization. So these basic ROIs, I think now we understand them, and based on the customer we are talking to, we have them at our fingertips. In fact, we are actually working on an ROI calculator right now, right? We can tell you to enter these 6 or 7 things about your company, and we can tell you what the ROI solution is, but hopefully we'll come out with that. It will be on our website in about a month's time.
That's fantastic. If one implements a blockchain initiative, what kind of challenges should one be expecting? What's going to hit us in the face if we're getting into something?
Yeah, I think it goes back to the point that you mentioned, Siddharth. Keep in mind that you don't think of blockchain as a technology. It's a business strategy. It's a digital platform. You're expanding your enterprise. And one of the things that you need to be aware of is that it will require your partners to be onboarded onto the platform. And the easier that you can make this, the faster they will adopt, right? So don't think of going and buying a blockchain as a service. A lot of companies are selling blockchain as a service. It's the wrong thing to buy. What enterprise should be buying is an end-to-end solution with a business value proposition built in. Yes, it uses blockchain, right? But that is 2 layers deep. What you should be buying is an enterprise solution which has a business ROI, which is easy to use, easy to deploy, easy to adopt, right? If you go and start buying blockchain, the conversation goes in a very, very different stream.
So what you're saying essentially is it starts with a strategy, and then based on that strategy, you use blockchain technology to enable it, basically.
That's right.
Okay, got it. Any examples you want to share with us of blockchain implementations in India or globally? Any examples you want to do that?
Sure. Let me give you 2, right? One from India and one from outside India, right? So one way we are working with one of the largest metal manufacturers in the world, and it's a pure supply chain use case where it is a deep tier supply chain. So this enterprise works with contract manufacturers as well as suppliers. So half a dozen contract manufacturers and dozen odd suppliers. And you can imagine the complexity of the supply chain with hundreds of thousands dollars worth of material flowing between them. And just being able to keep track of who's holding how much inventory at any point in time is a nightmare, right? Remember, this is not just going back to your point. This is not a supplier portal. This is a 2 or 3 tier supply chain, right? So how do you even get visibility into how much inventory is where? Leads to inventory leakages, loss of who's holding how much inventory, which means overstocking inventory, which means blocking cash flow. So this is a solution that has been deployed to track inventory across the supply chain, which has benefits both in stopping leakages as well as reducing the cash flow tied up in inventory. Right? Second example that I'll give you is from outside in India, and this is a data monetization use case. Right? What I can tell you is that there is a company A which has generated a bunch of data about a bunch of other micro entrepreneurs. Right? And they are packaging this data into small packets and selling it to a financier. And the financier is using this data to get the evaluate the credit limit or the risk of lending to these micro entrepreneurs, and then making loan offers to them because they have the data about their earning potential. And that's a very beautiful use case that we hope more of these will come in the future.
Lovely. I have one last question for you. So, Praphul, blockchain is a piece of technology, a database sitting outside the enterprise, and there are multiple stakeholders which all have their individual ERPs which are holding the data. So, is the blockchain basically pulling data from all these ERP systems on the go so that the data is real time, up to date, that kind of thing?
Yes, but let me say it slightly better. So the blockchain database is not sitting outside your enterprise. Okay, what is really happening is that you are creating a network of nodes. One node is at one ledger, another node is at another ledger, another node is under another enterprise. You are building a peer-to-peer network among them, and the blockchain database is replicated at these three sites. Okay, now this becomes the shared digital infrastructure that I was talking about. Now, to your point, how do I connect with my existing things? The blockchain itself does not say anything about this, but a solution like ours, which is an end-to-end solution, has connectors. So we have a connector with Oracle, we have a connector with SAP, we have a connector with Tally, we are now building a connector with Zoho. And the idea is to say that the enterprise shouldn't have to do twice the work, right? If you are entering in your system, we will pull data, and if something attempts our data, we'll push data to you. So it's a two-way bridges that we are building, and that really what was saying the end-to-end solution is what companies should be looking for, because blockchain is only a very small part of the overall solution that it enables.
Brilliant. I think most of the insights which you shared with us, Praphul, are very nice, very simple language. I really appreciate the time that you shared with us and the insights you gave during this conversation. I'm sure many of our viewers would love to hear all of this. Thank you so much for your time, Praphul.
Pleasure, Siddharth. Thank you for having me.